Is there security in Bitcoin? Can it hedge inflation? Bitcoin has been a trend lately, and many have testified that it is a gem in business. Since then, it has developed into a cryptocurrency with the most incredible global recognition. Because of its popularity, several more cryptocurrencies have been created. These competitors either seek to replace it as a means of exchange or are used as utility or security tokens in other blockchains and cutting-edge financial technologies. Using a cryptocurrency like Bitcoin, BTC, which functions as money and a means of payment independent of any one person, group, or entity, eliminates the need for third parties to be involved in financial transactions. It is offered to blockchain miners as payment for their efforts in confirming transactions. It can be purchased on many different sites. Suppose you've been keeping up with the news. In that case, you're aware that one of the top issues right now is the record-breaking rate of inflation, which is making monthly expense increases even more startling. But how do cryptocurrencies fit into this narrative? Some investors view certain cryptocurrencies as gold-like gold inflation hedges. Cryptocurrencies are viewed as riskier investments by some, and their price volatility makes them undesirable in difficult economic times. As this video continues, we will discuss Bitcoin and whether it can effectively hedge inflation. Number 1. Bitcoin technology and development keep progressing. The Apple App Store was substantially worse in its early iterations than it is now. The simple reason for this is that developers invest a certain amount of time and money in creating projects on a particular platform. The Apple App Store is now widely used and the source of millions of user applications as a result. Bitcoin is on a similar trajectory, with more daily development and a rise in users interacting with the network. Bitcoin's growth pattern shows no signs of slowing down, and there have been significant advancements like Twitter enabling Bitcoin tipping for content providers. Although commodities like gold can also be used as an inflation hedge, Bitcoin's potential uses in technology are expanding daily and provide it with a clear route for growth. Number 2. Bitcoin isn't tied to one currency or economy. Bitcoin is unrelated to any one currency or economy, much like gold. Additionally, it is not governed by a selected few businesses or interests. Instead, it is a global asset class that reflects demand worldwide. Investors must take on additional risk during periods of high U.S. inflation to make up for the loss in value of their existing holdings. A dividend yield of 3%, for instance, is often used to supplement retirement income. Therefore, 6% inflation is not acceptable. According to this, the S&P 500's typical long-term return is roughly 7% to 8% each year, just over the current inflation rate. Despite this, the S&P 500 has returned significantly more than the average during the past 10 years. The drawback of these large returns is that they have led to substantially higher values than in previous years. There are few feasible alternatives to investing in U.S. equities if investors want to earn returns of more than 6%, even at higher prices. The U.S. stock market, however, undoubtedly provides the finest overall risk/reward profile over the long term. Because it avoids many of the political and economic dangers connected with the U.S. stock market, Bitcoin may be among the better alternatives to equities. In this sense, diversifying an American's assets, income, and revenue away from only American sources is one of the most doable and realistic things they can do. Number 3. Bitcoin has a limited supply. The fact that Bitcoin has a fixed quantity of 21 million coins, of which approximately 19 million have already been mined, makes it a superior inflation hedge to other cryptocurrencies. There is no chance of inflation due to the ironclad fixed supply, which prevents the introduction of additional coins into circulation. However, a nation like the U.S. can raise the money supply by spending money and purchasing government bonds, which will lower interest rates, lessen the purchasing power of the dollar, and unintentionally lead to inflation. Number 4. Bitcoin is an easily transferable store of value. Bitcoin is secure, rare, easy to exchange, and durable like gold. Bitcoin is, however, also transportable, transferable, and potentially more decentralized than gold. Most sovereign states, including the United States, China, Germany, and other European nations, have control over the supply of gold. Theoretically, Bitcoin is easier to keep and safeguard than gold for anyone worldwide. Gold enthusiasts may contend that Bitcoin is just false money and that gold has intrinsic worth as a precious metal. Nonetheless, there are useful applications for Bitcoin's blockchain technology. In wealthy countries with relatively stale fiat currencies of their own, Bitcoin's use cases as money are quite restricted. Bitcoin, however, offers a superior medium of exchange in nations susceptible to hyperinflation and political unrest. Number 5. Bitcoin moves on, slowly but steadily. Although inflation has alarmed markets all across the world, it is clear that Bitcoin is operating exactly as it was intended to, notwithstanding its recent price decline. Investors in Bitcoin who are more recent are likely to hold losses. But investors from the previous 3, 4, 5, or even 10 years are earning enormous profits. It all comes down to supply and demand, a straightforward dynamic. The most valuable cryptocurrency in the world might see a surge in demand if current trends continue. Moreover, that price increase ought to exceed inflation, given the constrained growth in supply. Therefore, Bitcoin has yet to be an effective inflation hedge in the near run. Still, when we look at it over a longer time frame, that story changes. Let's take a look at the price of Bitcoin before the Fed's most recent round of quantitative easing, which began in the spring of 2020, to get a better understanding. At the time, the price of Bitcoin was hovering about $9,000. As of right now, it is about $19,000. Going back to 2009, when quantitative easing started and Bitcoin was just worth a few cents, makes it even clearer that it can outpace inflation. The fundamental qualities of Bitcoin contribute to its long-term value growth. Several of the main motivations for establishing Bitcoin is avoiding currency depreciation and ensuring your hard-earned money retains its worth. Number 6. Bitcoin is easier to verify its authenticity. Contrary to gold, it is practically difficult to transact with counterfeit Bitcoin. There is a purpose to the extensive industry committed to gold authentication. A partial list of some of the gold assays used is shown below. Equipment to test gold, acid, weight, magnetism, ceramics, and skin for scratches, X-rays. Because of all of these factors, as well as its superior performance over the last 10 years, many people believe that Bitcoin is a better inflation hedge than gold. Number 7. Time horizon matters. Evaluating an asset's performance over a lengthy period of time, such as 5 or 10 years or even more, is the right way to determine whether or not it is a true inflation hedge. The world's most popular cryptocurrency, Bitcoin, has a 5-year trailing return of 1,100%. During this time, the CPI climbed by only 18.5%, indicating a successful inflation hedge. Those who had bought Bitcoin would have seen their purchasing power soar despite its severe volatility. And this is the whole point of investing in the first place, to increase one's capacity for consumption over time rather than to deplete it. If people only increased their time horizons, the investment would be much easier. As many readers know, almost anything might occur in the upcoming month, quarter, or year. And since it is truly unpredictable, attempting to create a portfolio based on what might occur in such a short period of time is a losing game. In this context, looking at Bitcoin is the right strategy. Despite a 35% decline thus far in 2022, its track record speaks for itself. Digital money is as simple to use for younger Americans as social media and online friendships. But there are more people than only millennials with smartphones who are interested in Bitcoin. More and more investors have also flocked to the currency's banner. Many said Bitcoin is not a wise choice to hedge inflation, but there are many more reasons to invest in it. What do you think about this topic? Do you agree with me too? Share your thoughts in the comment section below. Don't forget to like, share, and subscribe. I'll see you in the next video.